Hey everybody, welcome to the morning market briefing. It's Wednesday, January 21st, 2026. Hope you are doing well out there. Tom, Russell, Ben, Nye here on the mics. Got the whole crew back. And let's just jump in, Ben. Let's talk about Netflix. Seems like perhaps thematically we've seen the bar set a little bit too high for companies. Netflix down 7% while forecasting organic growth rates of 11 to 13%, which is a bit of a disappointment.
Yeah, Hicks, if you can pull up the earnings surprise image that I sent you for this quarter, what you can see here is that, look, this is not normal to have pretty much every sector. We've only had about 10% of the S&P 500 report earnings, but pretty much every reaction to earnings is negative. And I think a big driver of this is that it wasn't the companies, but it was analysts in December and into January really setting the bar high for 2026. After that GDP number came out, what happened was a lot of analysts said, this thing is really going to shoot higher, and I need to ratchet up my expectation of what this company is going to do. A lot of the notes were bullish. Companies were being talked into. They were basically being goaded into giving soft guidance that was more aggressive than even the street at that time was expecting. Meanwhile, the street wasn't really what they were doing was they were saying, would it be wrong to think that you guys can accelerate this next year? And the companies can't really say if it's wrong or not, but they're basically being talked into that position. And I think you've seen a lot of companies have that, which is why you're seeing the reactions that you're seeing. Even today, we have Travelers reporting earnings. They're down. The insurance company.
Yeah.
Charles Schwab reporting earnings. They're down.
Despite, I would argue, pretty good numbers, but they came in at $1.39 in EPS. Expectation was a whopping $1.40. So missed by 1 cent, had a 34% increase in quarterly profit. Trading revenue rose 22% in the fourth quarter, which is really the business. So ostensibly a good quarter, but that bar not quite met of $1.40.
What's the stock doing?
It's down 1%.
And you're seeing the same thing with Johnson & Johnson. Johnson & Johnson down 3%. They had good earnings. They actually provided guidance that was ahead of the street, about 6% annual growth, which admittedly is a little bit slower than what they did in Q4, but better than expectations. And then you have Netflix, of course. Netflix came in with revenue that was right in line, about 12% on the organic side. But it was below the 17% exit rate from Q4, which again makes sense. Q4 was pretty strong. A strong quarter. Companies don't really want to be in a position where they have to cut guidance later in the year, so they're going to set the bar a little bit lower. And I think that we're seeing kind of a reckoning there. I don't think this is companies are dramatically underperforming. I think this is a problem of Wall Street modeling, and I think it's a problem with the analysts. I think that they got into this group thinking that there was going to be a really bullish guidance period, and it took a lot of the expectations up. Having said all that, there's still a lot of money on the sidelines, and I think a lot of money is going to come in, once we get these Greenland things that are out of the way, we get through earnings season. I think there's a lot of money that's going to come in and buy this market with a lot of these companies on discount now that they've reset the bar to a more reasonable level.
Martha Stewart used to be a Wall Street model. People don't talk about that nearly enough.
Nobody's talking about it. Trump's supposed to be giving a speech, I guess, right now. I'm not seeing any commentary on that. Seems like it might be pushed back a bit. There was a brief electrical outage on Air Force One, so
I was seeing some dramatic.
He's just like us, folks. Trump also unable to take off on time, so it happens. Seems like it's going to be. I would imagine he's going to play the hits. It's going to be a wide-spanning conversation domestically. What's top of mind for you, Ben, in terms of what you think he'll address, other than how hot this country is?
I think the big thing is going to be the housing and the affordability piece, but particularly housing. And I think he's going to touch on pharmaceuticals and how he made most favored nation and how he's bringing drug prices down. I think that's going to be a big theme. One of the themes that we've heard already from Howard Lutnick especially, but also Scott Besson, is that they want the U.S. to be a model for what can be in Europe. In fact, Howard Lutnick was so aggressive with this, saying Europe really needs to get its act together last night at an invitation-only dinner, that Christine Lagarde, the chairman of the ECB, walked out of the dinner. She was so unhappy with how he was not being so nice about how Europe's managing its
That's
economy.
surprising because Lutnick seems so cuddly.
Yeah.
And
I feel like he'd be a lot at a dinner.
I feel like in the inner Trump circle, and this is not a political statement, but of those who are close to Trump, he's got to be the last guy I'd want to grab a beer with.
Yeah. I mean, Scott Besson would be number one, obviously, right?
Besson,
A nice chilled Chardonnay.
tell you what, man, I feel like a dive bar with Hegseth would be a night you would not forget
That's true.
in all the wrong ways. So he might actually be up there with Lutnick on the don't get a beer with list.
Yeah, you go hard with Hegseth, and then the next morning
You wake up with tattoos.
You share a Dr. Pepper with
Yeah.
Scott Besson at the gas station while you nurse that hangover.
Internationally, I'm sure he's going to talk about Greenland. I'm curious to hear the broadening out of this Board of Peace and the goals he has for Gaza.
Yeah, I'm really curious to see if anyone signs on or if it's just going to be Belarus and Russia and the United States.
The big three.
And Tony Blair. Tony Blair is interested.
Is chairing
in
it,
too.
right?
So I think the Board of Peace will happen, and I think the Europeans will get on board. I think what happened last year after Liberation Day and the Europeans folded like a lawn chair, they don't want to do that again. And certainly they don't want to be perceived as doing that again. I mean, you even saw Emmanuel Macron like talking tough and then privately texting Trump saying, "Come grab dinner with me on your way out." They are talking tough publicly because they know that all of their constituents think that they're weak. And they're openly being told that they're weak, and they don't like hearing that.
I mean, I think it's a point of pride in European culture to look down on American culture. I mean, I think it's like a deep-seated feeling, and I think a lot of that results from the fact that they've just been absolutely market corrected by just
Everything.
an overflowing fountain of freedom over here for, call it the last 249 and a half years. But I think it's one of those things that's so deeply rooted that if you're a leader, you can't just be out there and be like, "Oh, those Americans are actually onto something. We should work it out and get this done because they provide us with all the cool economic things that we like outside of fine cheeses and Volkswagens, and insurance if you're the UK." I think it's just I think it's one of those things where, like, it's the same way you can't be the president of the United States and be like, the WNBA is the best.
I mean, it's just
everyone's just going to go, "What? What are you talking about, man?"
It's just it's a totally different culture with a different economic system, and they're trying to have the same, say, this is the right thing for us, and it might be the right thing for them, but it's not the optimal economic model. So you can't have it both ways. You can't simultaneously have an optimal economic model and still have all these aspirations. If you want to have the aspirations, it's going to come at an economic cost. And I think that, they and us need to have the humility to accept that. I mean, if you're going all out on the economy, that's going to have a cost too.
This is a weird behavioral question, but do you think that thousands of years of European culture where they all had kings that were either from distant lands or related to someone from distant lands, and they kind of had no control over their economic systems, call it for the first 2,000 years of European culture, do you think that that's somehow deep-rooted and that's why they feel so comfortable by letting the European Union run the show out of Brussels, where it's like, "Oh, yeah, we're the Netherlands and we're like a totally free people," and then they're like, "Hey, you can't do this because somebody in Brussels who's ostensibly in charge of you and your government said you can." They're like, "Oh yeah, no, that's cool. We're good with that."
I don't think they see it that way. I don't think they see that Brussels is running is making policy. I think some people do, and I think that's where you're seeing kind of the UK Independence Party.
But if you tweet it, you go to jail, so nobody else sees it either.
They see it, they just don't talk about it.
Yeah. If you see it, you see that one guy who complained about, I forget what he tweeted about, but they arrested him and put him in jail for 7 months, and they showed that his tweet had 33 impressions.
That's
That's tough.
tough.
It's
That's
like
the
not
worst
only
ratio ever.
it's like not only is no one following you, but of the 33, one of them was the cops, and you got to go to jail.
Well, they should stop complaining. We had a speaker last night at our great event. Thanks to everybody that came out. Giving keys to happiness. He said to start with love. I've sent that to a number of people in my life to just make sure that they would be more loving. We should stop worrying. We should stop complaining. It's a quick path to jail if you're in the wrong place. Build good relationships and say thank you. So thanks, guys. Thanks for being here.
If we stop complaining, there's going to be a much shorter podcast.
We're going to have a really short podcast. And, I mean, even today,
I don't even know what I'm going to talk
about. We're
about.
Wrapped up here. But you guys did a great job on the panel. I thought Harrison was excellent as a moderator. If you were to summarize what you shared last night to those that were in attendance, what are the big themes you're looking at? I'll start with you, Tom.
I mean, I think it's a lot of the stuff we talk about here every day. I think that inflation's coming down faster than people think. I think the housing market is a big component of that and really is going to drive the second half of this year, whether or not it starts to tick up or maybe gets worse. I think really determines how many rate cuts we get this year and what the long bond does. And I think there's an opportunity, particularly over the last 24 hours in the long bond. I mean, I think a lot of the volatility in bonds yesterday has to do with the Japanese being unable to continue to control their yield curve. And we saw a real push up in yields. And, you know, we always talk about it being a layer cake where different rates all move independently of each other, but the lowest common denominator, the lowest rates are kind of the set point. So if the Japanese who've been at the bottom of the stack suddenly shoot up, then everybody who trades relatively to them is going to move up too. I don't think it really has much to do with, you know, that we're going to go to war with Europe over Greenland or that the, you know, economic bazooka is going to be shot by Europe and the U.S. economy is going to be dead in the water because good luck, or that, you know, the Danish are going to sell $100 million in treasuries, because I can tell you we could sell every bond we own right now, which is a lot more than $100 million, and the bond market would continue to operate as usual. So, I mean, the main themes are, continue to be looking at unemployment. I think unemployment has been artificially low, and I think that bubble is about to pop, and 6% is probably not off the table and probably won't really put a bullet in GDP either.
Ben, big themes for you?
Yeah, I mean, I think the delinkage between economic growth and unemployment is kind of one thing that we discussed that could be a big theme, you know, and if the Fed's looking at GDP, and they might be actually missing what their mandate is, which is employment. So that's something that we talked about. We also discussed that there would be more tailwinds than headwinds in the first half, which is good, as I alluded to earlier. But it looks like there will be more headwinds than tailwinds in the second half of 26. For context, we think that, you know, GDP could easily be over 4% on a year-over-year basis for the first half of this year. In fact, it's likely to be the case. But for the full year, you know, if you have a 3% GDP number for the full year, then that means in the second half you're below 3. So a little bit of a deceleration there. So that's kind of how it shapes up right now. Obviously, things can change. You know, maybe we do bring rates down. Maybe we get a new Fed chair that can effectively manage this. But right now, that's kind of how we see it shaping up. I did like the guest speaker. I thought he did a great job, and I thought big shout out to Harrison Fish for setting it all up, as well as the entire client service team, Natalie Rogers, David Hale, for really leading the charge on that.
Shout out to the super users who showed up too. Many
Yes.
Loyal listeners of the call there.
Yeah, it meant a lot. I mean, I thought it was fitting. They talked about relationships and the importance of that in terms of happiness and contentment. And it was by far our most well-attended educational event, and it was cool to just see people. We had clients there that had been clients since the firm started, and we had clients that are brand new. We had people that aren't clients, but everyone there compelled, frankly, by a relationship to come out. So it was cool.
I mean, I think that's more of our job, I think, than people think. If you can help someone eliminate the anxiety when markets get rough. I mean, think back to March of 2020. How many clients were like, should we go to cash? You know, and those people have benefited quite a bit from not doing that. And so a little bit of that is, hey,
Trust.
we've got to do this. And I mean, a lot of this call is sort of that, where it's like, hey, you can tune in and be like, what do these guys actually like? What do they really talk about internally? Get an idea for what we're doing. And it makes the relationship a little bit stronger, because at least you have an understanding of who the boys are, you know, what our thoughts are kind of on a daily basis as things move around. I think it's a big piece of this as well.
Yeah, if you're anxious about what's going on in the markets, obviously you know how you can access us there. But we continue to add pieces to help allay concerns. We are happy to help on budgeting. We're happy to help on kind of understanding your business, or if you're getting calls in, we can talk about how private equity would view your business. Melissa Dodson has a new income lab piece of software where you can see basically what monthly income you'll have in retirement. So all of these pieces we're kind of bringing together. So anything that you need, we probably have it. It's just a matter of finding that fit.
And we've got a podcast producer. Hicks was probably the hit of the event. Just a line of people there to meet the producer.
I mean, a lot of people kept asking me, "Who's that hot blonde?"
Yeah.
And I said, "That's Jonathan Hicks."
Yeah.
You should know his name.
Yeah. He is not just a piece of meat. That's just what he eats.
Yep.
All right, we'll wrap it up there. Y'all have a great day. Talk to you soon.